Hello and welcome from Trend Signal for our review of the data and events the week beginning the 19th of October. On Monday morning, despite better than expected news overnight from China, equity markets were mixed to a bit lower, a bit higher. Certainly the FTSE and the resource sector took a little bit of a knock. The Chinese third quarter GDP beating consensus. Market consensus was for a figure somewhere around 6.8. I'd read as low as 6.7. Number came out at 6.9, which was, as I say, better than expected. The emerging service sector now growing quite well, which is offsetting some of the weakness in the manufacturing and property sector. However, 6.9% was weaker than 7% reported in Q1 and Q2, and weaker than the 7.3% reported for 2014 as a whole. I guess the muted reaction is probably summed up not by the Financial Times, but more likely by Market Watch here. Shanghai's GDP at 6.9%, tried 3%. And I think it is that general distrust or mistrust of state-produced data, hence the reason for the reaction of this particular number. Certainly the more independent releases from the likes of Market and HSBC are more respected and believed than the state number, as it were. Markets last week had a bit of a sort of bumpy time, really, but the intraday volatility seems to be a lot greater than the volatility that we're seeing from one week to the next. Certainly, stock markets, the FTSE was shade lower, about 0.6% lower, whilst the Dow, courtesy of the second half of last week, rallied 130 odd points, along with the S&P up 19 points, so just rallying a shade under 1%. Currencies, well, the dollar that had also a bit of a turbulent week, but ended up unchanged against the euro, and with sterling back up about a cent 20, which is just under 1%, on the back of more bullish, hawkish comments from the Bank of England. So, markets last week were really a game of two halves. Risk off first half, equities down, bonds up, and then second half, more of a risk on, with equities rallying again. The dollar, as I say, was dragged up and down as weak data suggested that a rate rise was well off the cards for now, and then speculation mounted what the ECB were going to do this week. We'll get onto that in a second, but it's certainly a very important week for central bank watching regarding ECB policy. Also, what was tugging the dollar around was markets implying that there may well not be a rate rise this year. A survey of economists still shows that the Fed are expected to raise rates this year. Over 2/3 of economists still predicting that. So what about the ECB? A number of articles about whether the ECB will signal a second round of QE soon. The reason why we're talking about it is that we've got on Thursday at 12:45, we've got the result of the monthly ECB policy meeting, which has actually been held in Malta this month. And there is a lot of speculation about another round of QE. So another round of QE, really what does that mean? More monetary stimulus for the Eurozone economy, sovereign bond purchases by the ECB, pumping another cartload of euros into a less than impressive Eurozone economy. Obviously an increase in supply of euros would weaken the euro, pressure rates lower, hopefully stimulate business activity. And obviously that would probably bolster stock markets. The trouble is QE1 has not exactly done that. Since March, the euro has rallied about 6 cents to the dollar, so it hasn't really weakened at all. A lot of the weakness in the euro was priced in a good 8 weeks to 10 weeks before the actual announcement of QE. Nevertheless, it's interesting that the markets are reacting positively to the idea that there's going to be another round of QE. The markets are reacting positively to the idea that the Fed won't be raising rates. And really, the fact that those two events are going to happen, or speculation about those two events happening, does not suggest that the global economy, or certainly the US and Eurozone economies, are doing particularly well. So with that in mind, let's have a look at the data and events coming out this week. Certainly, Mr. Mark Carney, the governor of the Bank of England be watched quite closely. I think some of his comments, people will have misinterpreted what's going on in the markets, and Mr. Carney has been very clear that the Bank of England will make their decision unilaterally. They don't have to wait for any other central bank, i.e. the Fed, to raise rates before they do. And it is likely, or certainly possible, a strong possibility, that we could see a rate rise in the UK before the US. Although it's not probable, it is possible. Certainly this week we got two monetary policy meetings. The Canadian Central Bank meeting and the the Bank of Canada, I should say. I think with the Canadian election coming up, so I think it's highly unlikely they're going to be doing anything there. Certainly the expectations for rates to remain unchanged. We also have Carney speaking again on Wednesday. I think Janet Yellen actually speaks on Tuesday as well, although it's not listed here. I know she is speaking. And again, all central bankers, certainly the notorious ones, I should say, the likes of Janet Yellen being chairperson of the Fed and Mark Carney being the governor of the Bank of England, they are listened to very, very carefully. Thursday is the key date this week with the ECB announcement. We are expecting some sort of announcement. Interest rates will be kept unchanged. But there is a lot of speculation, as I said at the beginning of this, that the ECB could could engage in QE2, which could be by way of increasing the amount of asset purchases from 60 billion euros a month, or extending the program into 2017. At the moment, the quantitative easing program that started in March is due to end in September 2016. And a lot of questions are asked along the lines of, the Eurozone has only just started its QE in March this year. I guess the answer to that is, but the Eurozone economies have not exactly lifted off. Growth is patchy. Deflation is still a significant threat, especially in light of the Chinese currency devaluation in August. I think Mr. Draghi, the chairman of the ECB, is determined to fight back against any of such competitive devaluations, and the renminbi devaluation is significant because it effectively exports deflation from China to the Eurozone. So, and also, of course, the emerging market currencies have also taken a whack, which puts additional pressure on the Eurozone and some of the key emerging export markets that have been targeted by exporters in the Eurozone. So, other than the European Central Bank meeting, we've got, obviously the most important thing is the press conference, not the actual release at 1:45. 1:30 is when the fireworks normally happen, so that really is the time to pay attention. Friday we've got a lot of French manufacturing PMI data, and a lot of that will be scrutinized carefully, but I think the events or the markets will have already been set in whichever direction they're going to be going in following the ECB's press conference on Thursday, so I don't actually think they'll be that important. Other events this week, it's important to remember that we're in the third quarter earnings season in the United States. We've already had some disappointing numbers. In fact, it seems to be disappointing across the board, really. Certainly, Goldman Sachs, Citigroup were disappointing. There's been other financial news results out on Monday lunchtime. And I know that the key results of Microsoft, Amazon, and also Google, which got to be careful to remember that is now called Alphabet Inc. So the company formerly known as Google, now called Alphabet Inc. Those are the big headline results. And I think it's important that we do see some positive results fairly soon, because we've got the energy and materials sector next week, which are expected to be pretty dire, as you can probably imagine. So I think the third quarter earnings season, that may well impact the markets as it develops through this week and next week. So that's something to be aware of. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.